Hello and welcome to CX Today. My name is Charlie, and today I'm delighted to be joined by four excellent analysts to discuss the latest news from across the customer experience space. Yes, today I am joined by Dave Michels, lead analyst at TalkingPointz.com, Liz Miller, VP and principal analyst at Constellation Research, Rebecca Wettemann, principal at Valoir, and last but certainly not least is Michael Fauscette, a founder, CEO, and chief analyst at Arion Research. Thank you all for joining me, and I thought I'd start maybe this conversation by discussing Zoom's new virtual assistant, Claude. Interestingly, Claude is Anthropic's competitor to ChatGPT, which Zoom will soon deploy across its portfolio, starting with the Zoom Contact Center. For me, this is interesting because it's someone in the space not using ChatGPT. But I was wondering if anyone had any kind of more thoughts on this piece of news.
So I think that what's happening here is that what we've learned from OpenAI and everything that's happened with ChatGPT and everyone kind of coming out with the announcements of who they're partnering with and what they're using and who they've connected with is you need a lot of visibility in the you need a lot of visibility into what is happening with the models, right? You need a lot of visibility with what's going in to the recipe. I think the interesting thing with Zoom is the inference here is that they've got a very large corpus of data by which they've been able to train their own language model. I think that in and of itself is very interesting because whose voice and whose language is that, right? So I think there are a lot of questions that come up, but I think there are a lot of questions that we're all asking about generative AI right now that I think are really important for where all of these types of solutions are going to go. I think the interesting thing with Zoom's introduction is that it will probably bring up more immediate questions than a whole lot of answers, because I think that now that we have been trained to ask whose data is it anyway, and what are those guardrails, and what exactly do you mean by guardrails? I think that they're going to have a lot more questions. So I think what we're going to see in the next couple of weeks is, do they have the right answers?
So there are a couple of things that are interesting to me about the Zoom thing. First is the sort of composable plug and play model. Recognizing moving forward that companies are not going to just have one model, they're probably going to have multiple models. And the fact that this area is evolving so rapidly means folks are going to be experimenting in different ways. We just did a study where we found that more than 50% of workers have experimented with generative AI today. So this is really something that's evolving very rapidly, a lot of adoption. I think the other thing that's interesting when we think about the constitutional AI piece is not just the guardrails that are being put in place, which are really important as we think about bias and things like that, but also the idea of data models. Maybe the internet isn't the best place to train your model, and it's going to be a combination of large data sets, smaller private ones, specific use cases, industry data models, all those sorts of things where being very clear about what the parameters are and where that data lives and how it's to be used are going to be an important part of training and making the most effective models possible.
I think that's lots of really good stuff there. I think, as you said, the Zoom's agnostic approach may be an interesting one to follow. It's not kind of committing fully to GPT, and maybe it can, innovate in different ways by connecting various models and within its portfolio and bring kind of new innovation to life. But I think maybe now it's best to move on to Twilio. And they recorded a trailing 12-month net loss over the past, in the past year, for 1.38 billion, as per earnings figures reported by the Motley Fool. An analyst writing for the publication stated Twilio's business model simply isn't efficient. I'm just wondering if you all maybe agreed with that and what your thoughts were on the news.
I think with Twilio, I don't know about efficiency in their model, but I think there's some real challenges when you're trying to make the transition from a tools, dev tool platform to a full communication platform. And if you're doing that at the same time, you've got all this recession talk and companies are slow rolling some decisions. And, that's a big project. Do we take it all on at once? And then I think, to the idea of them kind of moving their IoT business in a package out to core. I think, it makes a lot of sense, at least from that perspective. And I think the long-term play that CPaaS plays is really interesting. But I just think, there's some disruption and some slowdown that's happening that certainly does make them take a bit more of a conservative path when they're projecting the future, in my opinion, anyway.
I think that I totally agree with Michael. I'd probably even take that even a step farther, right? That look beyond what they were attempting to do in the communication space. They went out and bought Segment, right? And that was a huge buy. And Segment was a great CDP and is a great tool for a lot of organizations. But if you are trying to be something bigger, you're trying to be that platform that's attracting all that data in, you're looking to create tools that spread far beyond kind of where your communications, and I would dare even say telephony routes, kind of heritage is. Now all of a sudden you want to be a marketing tool. Now all of a sudden you want to be a sales tool. Now all of a sudden, it kind of got really, really big and grand ideas. And then it felt like it stalled because it was like, oh, wait, this stuff is really hard. There's a reason why there aren't many players out there that are the Swiss Army knife across the totality of customer experience. It's because that's really hard to do and to do well and to understand all of those functions well. So, I think that this is hopefully a wake-up call for Twilio, like focus in, double down on focusing. But the thing that I want to see is, I dare say this out loud, I feel like this is like, I'm going to say something naughty here. Is it time to sell Segment to someone?
I think Jeff Lawson, the CEO and founder, is brilliant. I think he's done a fantastic job with the company, and he figured out pretty early that CPaaS, a category he defined and created, is becoming commoditized. So he attempted to do a pivot with Segment, and I think it was a good strategy. I think it was a good logical purchase. But unfortunately, the economic rules changed, and now is not a time to be non-profitable. Now is not a time to be doing a pivot, and he's being pummeled. I mean, it is just. I disagree. I think Segment was a logical thing. It's just that the timing is proving to be very, very bad. But nobody in the CPaaS space is doing particularly well, unless you call Microsoft or somebody a CPaaS player, because that's the problem. Everybody's moving into that space. So he's trying to get out of it. The loss is staggering. It's big, but I don't even care about the loss because they were losing money for 5-6 years. No, they've always been losing money. So the loss isn't even the factor. The factor? I think the issue here is it was a surprise. And we expect more from Mr. Lawson. We don't expect surprises. Wall Street hates surprises. So he's getting beat. And the problem is that this stock has been falling, consistently now for a while. It's getting pretty damn ridiculous. And I don't really understand all the moves they're making. They hired Joyce, the CMO from Genesis, and I thought she was a pretty bad CMO at Genesis. It's like, what? And so I think their marketing is kind of falling apart now. It's like, surprise. And so I don't really know if people understand what's going on with Twilio, but it's a pivot, and it's the wrong time to be doing a pivot. That's the story.
But usually a pivot means you're going towards a direction. Like, I totally agree with you, Dave. The moves that he has done are really, really smart. Like, if we could go in a way back machine and maybe go back 3 or 4 years, we'd all be like, amazing. But there was a clear direction there. Like, he had a clear vision at that acquisition of Segment, and it was smart. If they could stay on track of that vision. But it was almost like the minute they bought it, they were like, they just started to meander almost as soon as the acquisition closed. Yeah. And I think it's that ability to stay the course. And if we got back to a point where Lawson could focus and have that vision and be that brilliant CEO that was leading in a really directed and focused way, you'd see that brilliance again, right? And again, you're right. Losses be damned if there's a vision. I just don't get the vision anymore.
I was going to say, I sort of feel like that there's a bit of noise coming from the traditional customer versus the new customer too, right? You've got kind of paying the bills with all the older API dev stuff, and you move kind of across these different offerings, and none of them have particularly caught on yet. I mean, Segment's done well, I guess, but in general is not it's just so muddy between traditional developer and new, line of business customer, and which direction are you going? And I don't know, it just seems a bit muddled to me. And I think that has a tendency to leave your people wandering around sometimes and trying to figure out what direction you want them to go.
I think what's also interesting is, when they first acquired Segment, a lot of the marketing was around, you need more to do more with your first party data because Google Chrome is going to stop using cookies in 2023. And then that got pushed back to indefinitely. So I think that might have hurt it a bit. But I also think it's interesting. Obviously, Dave, Michael, you said they got rid of their IoT firm. They also got rid of ZipWhip, I think about little more than 12 months after they bought it for 850 million. And then there's the point in Liz, what you were saying as well, in terms of they didn't really put enough eggs in the basket. They brought out their CCaaS platform at the same time AWS bought out Amazon Connect as developer-friendly solutions, and look how much Connect has kind of evolved compared to Flex. There's lots of interesting strands to that one, but hopefully Twilio can get that direction that you'll hope they will find and build back. More depressing news, I'm afraid. Bad theme that I have in these calls, and that is Lifesize going into bankruptcy. It seems that Enghouse are about to sweep up their assets, so maybe there's finally some consolidation in this space. Lifesize have sort of passed the blame on the kind of lasting impact of the pandemic, hurting a lot of their video conferencing business. I don't know if anybody has any thoughts on this news, though.
Well, quite simply, it's just too many companies and too little growth. That's actually not accurate. There's plenty of growth, but it's all at Microsoft, and so Microsoft's basically sucking the air out of the ecosystem, and companies like Lifesize don't stand a chance. And so I don't know if you can call it consolidation or not. I mean, Enghouse doesn't do much with these products, but hopefully Enghouse will do something with it. The Lifesize made a big gamble when they got into CCaaS. They bought Cerenova. I don't think that ever caught hold. I think Cerenova still has a better name than Lifesize and CCaaS. They try to change the name, but Lifesize has always been video, and Cerenova was always CCaaS, and it just didn't implement that very well. But yeah, just too many companies chasing too little growth.
I think it'll be interesting because I think part of that news also included kind of that focus on and understanding that existing customers would have a bit of that panic of like what to do. And so as the consolidation happens under Chapter 11, I think they took out, it was several million, I want to say, in kind of funding, 5, as Michael's pointing out, 5 million in funding there to make sure that there was stability as it was going through. So I'm not sure this is like hey, we're liquidating everything and we're going to be gone. Like, this is not a Bed Bath & Beyond fire sale, because I think there was some pretty smart thinking of, let's get some funding in here to make sure that through this process there's stability, so that through the kind of the legal portion of bringing all this together is going to happen. But to Dave's point, I mean, I think the focus really needs to be on Enghouse and what they plan on doing with now a very kind of staggered fits and starts kind of portfolio, if you can now call it. Like, what's going to happen when all of that comes together, and how's that going to impact the customer? So it's great that Lifesize is creating stability for their customer. I think now for Enghouse, the question is going to be, what are you going to put your assets first, or their customers first? And that's going to be the big challenge.
I think Enghouse has done a fantastic job in the past of acquiring these distressed companies. They just they acquire them for a little cost, and they maintain them, and but they don't really do much to them. In video, the last one was, I don't know, video probably 4 or 5 years ago. As far as I know, video is still alive and well, and they're still selling the product. But I don't think there's not much new to video. I don't think they put it into other products, and so I suspect it's just going to be, Lifesize is here if you want it. Customers can continue to use it. So it's a reasonable ending to a story. Lifesize is actually a great story. I mean, Craig Malloy was, he had two passes as CEO of that company, and the timing was right. They made fantastic hardware. They were doing a lot of great stuff, but ran out of runway.
I think, in the contact center market, we've seen such dramatic change in the past 2 years, right? You're looking at moving to the cloud model, moving to looking at generative AI, looking at a whole different buying process, deployment process, upgrade process. It's not a time for any company to sort of sit on acquired IP or acquired knowledge base. And I think it takes a different kind of leadership too, to drive these kind of companies right now when you're not just chasing growth numbers, but looking at how do I deliver capabilities in a way that the contact center can digest and get value from, and how do I continue to innovate in a way that's going to deliver more value for customers.
I mean, it's a crowded space too, and obviously pandemic and remote. Are we remote? Are we going back to the office? Where do we work? What are we doing? I mean, all those kind of things make this more complicated for all those vendors, I think, in the back end. What is it really going to look like, and what do you want? It's a little hard if I'm a company to invest in, making large changes right now, because I'm not 100% sure what the world's going to look like in 12 months. So I don't know.
Yeah, but you're both talking about innovation and investment and product development. That's not Enghouse. Enghouse is going to make it available and support it for quite some time, and they'll make plenty of money at it. And there's nothing wrong with that. Yeah. Not everybody wants to jump on generative AI, and there's a lot of question marks. And so a lot of companies are making bets that may or may not pay off. And so Lifesize wasn't in that position to do that. Enghouse is. It's a perfectly good place. I'm sure a lot of customers will be much happier with Enghouse owning it than having it shut down. So.
More stability anyway, right?
Yeah, I think it's I've covered that subject. It's a bit, seeing Lifesize go down. We've seen all the trouble at Avaya too, and we've mentioned the Twilio news. It seems to be difficult times out there in the CCaaS space. And then NICE CEO recently came a lot, and he said there's a lot of companies around us that are struggling, although NICE posted good earnings results themselves, so it's kind of counterintuitive. But it's a very interesting space to watch, and hopefully we won't see many more of these stories. But now maybe onto some lighter news, hopefully, and just some a new breaking story that's come to light in the past days. And that is that an investor has invested in both RingCentral and 8x8. I don't know, Dave, you seem to be quite up to speed on this. Do you kind of want to give us a quick overview of the situation?
Well, I don't know if I'm any more up to speed than anybody else. It's just a few articles that have been written on this. But, whatever it takes, these companies are so undervalued. The companies are trading at a fraction of the value they were trading at during the pandemic. And so you can say that was too high during the pandemic and now it's too low afterwards. Where's the right value? I don't know. But it's so low, it's ridiculous right now. And so rumors of acquisition, sure, if that makes it go up, we'll take that. You got to remember, RingCentral just most of these companies in our space that have low valuations, they're still reporting double-digit growth, and so they're doing fine. They're just whatever it's worth it'll average out. And so these guys see an opportunity. They see an opportunity possibly to consolidate Ring and 8. There's some merit to that. I would say there's a lot of overlap, but yeah, Ring could use its own contact center. I could see some benefits, but it all depends on what kind of price you get them at, and if the shareholders are willing to bet on the new owners or not. So whatever it takes, if the stock goes up, more power to them.
I think the thing to remember in this announcement is that this investment group is notoriously and even self-styled as an activist investor group, right? And so typically what they have gone in and done in a lot of their previous acquisitions, and especially with Daniel Gibson, I think is the person at the helm of that fund, is they're looking for not only efficiencies, but they're looking for scale. They're going to be wanting to understand, great, there's double-digit growth, but are we going to maintain that over the next 8 quarters? So I think there are going to be a lot of hard questions being asked of each individual group, and I think that those are questions that, if I'm being super honest and maybe a little persnickety, I'm just gonna be a little grouchy for a second. I think that a lot of times, a lot of organizations in this lovely space that we cover tend to be a little bit on the navel gazing side, or we just tend to look at what's happening within kind of the very insular nation areas of CCaaS or UCaaS or CPaaS. And so we just kind of look at what our immediate competitors and neighbors are doing. But I think what an activist investor is going to come in and do is be like, hey, wake up, like things are happening outside of this space. What are you guys doing? And so if that question is, what are you guys doing and can you do it together? Would it be better to do it together? It feels like that's more of the direction that an activist investor is going to take these conversations, as opposed to, hey, why don't we just bind these two stocks together? It's going to be about how do we make this jump like threefold, fourfold by asking really hard questions. And you know what? I'll be honest. I think that our little corner of the world in this space, it needs really hard questions from people from the outside. And so I'm kind of looking forward to seeing what shakes out with this shakeup.
Yeah, I mean, I think, you've seen several runs of activist investors have a big impact on different leaders in this space for whatever reasons. The only thing that makes me nervous sometimes when you see this happen is, do they have the expertise and will they admit that they don't, if they don't, to actually put this together and make it make sense? That's the one risk that always kind of jumps out at me is you take some random business person who's really smart, they may be able to figure it out just fine. But then again, if they don't know anything about the space or the market, I don't know, just it's troubling, I guess is the way to say that.
Well, Ring's got pretty solid execution behind them. It'd be pretty hard to criticize Ring for having bad. I think the mistake at 8x8 really was letting Vic Verma leave. He wasn't the founder, but he may as well. He gets founder credit. He was there long enough. They brought him. They pushed him out. They brought in Sipes. They didn't give Sipes very much time. Pushed him right out. And now they have an interim CEO. I don't even know why I've ever put the word interim on a CEO. It's just kind of what's the point of that? So they've got an interim CEO right now. But I would love them to bring Vic Verma back. If they don't bring Vic Verma back, or if they don't take the interim title off of Samuel, then I think then 8x8 would probably be better. But 8x8 is fierce. I'm sorry, Ring is fierce, and these guys are execution machines, and they've done a lot of really good decisions, and they're still being run by a founder. Vlad's been there from day one, so good track record there.
Yeah, to Michael's point about activist investors, any of these moves have got to be more than just a numbers game. Right? This is going to have to be somebody who has the team and the vision to be able to put these pieces together in a different way than maybe we thought about, and also think about what is the greater value that it delivers, not just on the spreadsheet or on the stock price, but in terms of overall customer value. And customers need a lot of help stitching these different pieces together.
Yeah, absolutely. I think that's going to be a very interesting situation to watch as it goes forward. Obviously, there were rumors last November of a possible merger. And as you say, there are perhaps opportunities. I know RingCentral doesn't have its own CCaaS solution. It works with NICE quite closely. But then again, it might upset certain customers if it moves away. So there's lots of nuances in there to think about. But I think maybe that's a great place to end today's chat. Thank you, everyone, for joining me today. And yeah, thank you for everybody for watching as well. Bye for now.